So, what's happening in the Austin housing market? Let's jump into the data. We're going to talk about some price forecasting in 2025. Let's just go right into it. So, first, 2025 home price forecasts. We're looking at a 3% price appreciation overall from all of these different sources. And I definitely can agree and see why we're around that 3%. So, could we have more appreciation or less? Sure. And maybe different parts of Austin may reflect that. But overall, I definitely can see that we're at this kind of healthy 3% increase for this next year based on rates still a little elevated. And with the amount of people who are excited to come back into the market, we're expecting the market to continue to pick up compared to last year and this year. So, also mortgage rate projections. If you see, this has been updated from the past, from all the way of Q1 to Q4 of next year, averaging around that 6%, 6.5% to maybe lower sixes. We do expect some yo-yoing happening. So, like just last week, where we're at 6.8%, we're jumping down to 6.1% today. It's going to yo-yo. So, when you are deciding that you want to purchase and buy a home, really watching what happens with rates will be important. Now, what about additional? Here's more projections. If you kind of watch this curve line, you can see we spiked all the way in that kind of point of view. Q3, Q4, 2023, 2024, that huge 8% rates that we were seeing, and it spiked and it was kind of elevating. But we're kind of, as you can see, we're going on this downward trend line, which is really great. Now, do we expect a huge drop down to those low fives? No, that's not what any of the sources are showing as of this moment due to multiple factors. So we'll talk more about that in a moment. Now, foreclosure activity. I did have this question the other day. I figured I would show this data, and we do not see any type of huge increases in the foreclosure market. It is relatively even and smooth. So no concerns right now out of any type of foreclosure. There's so much equity inside of everybody's homes right now. Uh, the amount of equity is beyond imaginable at this point. So well over $100,000 nationwide for each homeowner. If you bought something in just the last year, maybe year and a half, you're likely not going to see that type of equity because you're going to need to wait a little bit more time as the market has corrected. Now, let's go into this quote here. So, looking ahead in 2025, my baseline expectation is that single family home construction is poised to steadily increase, bolstering by modest declines in financial costs for builders and buyers and the scarcity of existing homes due to mortgage rate lock-in effect. That's definitely true. We do have a lot of these sellers who are these lower interest rates from the pandemic time and trying to go into a 6.8% interest rate. That monthly difference in price definitely is impacting people's decision. So we also see that while interest rates decrease, it helps new construction builders afford to and take more risk to put more new construction on the market. And that is a direct competitor against your resale market. New builds also have lower interest rate offers through mortgage buy downs, and it just become more affordable as their interest rates around the 3.99 to 4.5% on average, depending on who the builder is. Here's another quote that I mentioned in the past, and I want you to see that it in fact actually occurred, right? There was a prediction a few months ago, and what is the reality? So let's talk about it. In December, following an election, and in the following year, the sales that are lost during November are recovered. It isn't that consumers say, I'm nervous and I never want to buy. They say, I'm nervous. Let's just wait and see how things play out. So what happened in November, right? Where was the sentiment? Well, we saw that 167 more homes were sold in November, marking a 7.97% increase compared to November of 2022. If you remember, in 2022, we were still moving and shaking and baking. There was a lot of sales happening, definitely increase in pricing. And so it's very interesting to see that even though there was a election year that was one that was a bit hectic for most, we definitely saw more real estate happen because people understood now what direction we're heading really in the next year. So we expect December to also show the same type of trend line where people are coming back. And I can see that in our business today, the amount of buyers who have reached out, inquired about buying both new build and resale, has been the highest I've seen in probably 8 to 9 years for this month. That is amazing to see. But again, it's also because October, there was a slowdown of people of interest in buying homes, and they're just coming back November, December. Okay, summary of the data for last month. The days to sell. It is now 74 days in the Austin market and continues to increase all the way from summertime. So it will take longer to sell. New listings, that's 6.21% increase. So we were at the 2753 versus the 2850. And I apologize, that is not an increase, that's a decrease year over year. The close price to list price ratio, we're looking at 94%, meaning if a home seller wanted $500,000, did they get it? The answer is no. They decreased the price down to 94%. So that means buyers are getting good deals right now in the December month and November's month. The median list price is $449,000, and that is a decrease from what we see in summertime. That is a very natural pattern because in October, November, December, we tend to see values decrease on an average about 4% year over year. This is very normal, very in line with what we expect. Median close price is at $430. That also is right leveled out. If you can see all the way from August, we did have an increase and then we decrease and just flatten out around $430. So that's our bottom line, right? That's our bottom of the curve. When it comes to active listings, 11,450 with sold listings of 2,262. When we look at that difference, there's 48% more active listings compared to the pandemic versus pre-pandemic, sorry. And why is that important? It's because that means as you have a lot more options to choose from as a buyer, that's great because you're not going to be pigeonholed to just one or two listings. As a seller, it means you just have more competition. You're going to price correctly and price fair, right? You're not giving money away, but you're also not trying to ask for above and beyond what like the pandemic time would have. Inventory, we're at 5.1 months. We did increase a little bit of inventory compared to the last 2 months prior. Now, here's a new set of data that I followed in the last few months. Number of homes sold and the resale. If you want to pause this and look over it, go for it. But as you can see, anywhere up to $500,000, we're selling about 23% of properties, 24% of properties. And if you go all the way down to the 3 million to 5 million range, we're about 5.60% of properties sold. That's a slight decrease. And so going through all of this, that means of all the homes on the market, if the most that we're selling is 23% of those homes in that sub $500,000 price point, expect as a seller that you're just going to sit a little bit longer on the market. Okay. Hence. That's why there's 74 days of days on market before you actually go under contract, an additional 30 days to sell. Sellers, let's talk about you. First of all, you're at the tail end of a cooling period. We see that in all the data at this point. This is good. This is really in our benefit and expect prices to continue to slowly appreciate moving forward. That's the expectation. We do also expect 2025 to experience a typical rate of price appreciation. We just mentioned that. Days to sell has increased. 5 months of inventory equals competition, normal competition. Interest rates are yo-yoing, right? So as we continue to have up in the sevens, well, less buyer interest. We dip down into just even 5.9. Buyers come out. That's when you see more interest. Negotiation power, anything sub 500,000, you're definitely in a balanced market. And anything above 500,000, it's a buyer's market. So sellers expect buyers to ask you for inspection requests or negotiate on price or compensation or closing costs. That's very normal in today's market. That's a normal market, balanced market. Unique homes that are popular and priced correctly, sold. You'll even see sometimes some multiple offer situations when it's really priced correctly. The asking price in marketing, it must be correct to sell. Buyers, okay, Q4 is a great time to buy. Just like year after year, with the exception of the pandemic, Q4, go for it, right? You're going to get the best deal. Now, usually you need to go under contract November or December, and you close January or February to really snatch that good deal. But if you try to go under contract around second week, third week of January, that's when a lot of buyers other buyers come on the market and the market starts to pick up again. So don't expect the best deal when you're towards the end of January. Resale interest rates, we already talked about that and what's happening with the yo-yo effect. And sellers will negotiate on inspections and closing costs. Just expect them to negotiate around that 45-day mark plus. Then they're going to be more open minded. Home prices under 450, still competitive, so don't expect to get the world. And then also listings are going to be in better condition versus the pandemic. Anticipate price increase in 2025. And the Fed expects additional rate reductions moving forward, which is great. And then we believe interest rates should be lower overall in 2025. So if you have any other questions, you're a past client, hey, you're just trying to figure out what the home values are, or you are a new potential client and you're just trying to figure out, is this the right time to pull the trigger? Well, give us a ring. We're here to answer questions. And of course, comment below in YouTube if you want to go and interact. You take care. See you next time.